Guys, welcome back. Okay, fine guys. So we'll quickly recap chapter 4, that is tax rates. Yeah, rates of tax will be usually given in Annual Finance Act, but if it is a special rates, it will be given in the Act, that is Income Tax Act 1961. Then tax rate depends upon 4-5 things, that is the category of person, whether a person is an individual, HUF, company, partnership firm, like that. Then amount of income, what is your total income. Then residential status of a person, that is whether you are an ordinary resident or not ordinary resident or non-resident, that is scope of total income also we have to see. Then age of individual, whether less than 60 or more than 60 or more than 80, only for resident individual we have to see. Then type of income, so normal income, special income. Normal income, it will be taxable at whatever normal rates are applicable for you. Either it might be either flat rate or slab rate depending upon who you are. Then sir, if it is a special income, then some special rates are applicable. There are 4-5 sections which are applicable as special rates, which we will see after this. So next, income tax at normal rates, that is we will also call it as gross rate or base rates. So first category of people, who are they? Any individual, whether resident or non-resident, every HUF, UOP, BOI, artificial juridical person. HUF means Hindu undivided family, UOP means association of person, BOI means body of individuals. For these people, always slab rates are applicable. That means if they are having income up to 2,50,000, then they need not pay any tax because it is called basic exemption limit. Now, what is the slab rates applicable for them, we will see. Up to 2,50,000, the tax rate is nil. Okay, they need not pay tax. From 2,50,000 to 5 lakh, it is 5%. Then from 5 lakh to 10 lakh, the tax rate is 20%. Then above 10 lakh, 30%. Any amount above 10 lakh, 30%. And it is a slab rate, we have to apply it accordingly. Agree? For example, if I have an income of 8 lakh, so for up to 2,50,000, first to 2,50,000, nothing is taxable. From 2,50,000 to 5 lakh, what is the difference amount? 2,50,000, you have to apply 5%. Then from 5 lakh to 10 lakh, 20%. But my income is only 8 lakh. So from 5 lakh to 8 lakh, only 20% you have to apply. Agree? That is on 3 lakh, you have to apply 20%. Hope you guys are clear. Then if you are a resident individual, you will be called a senior citizen if you are 60 or more in the previous year. In that case, instead of basic exemption limit 2,50,000, it will be 3 lakh. All other things remaining the same. Then if you are a resident individual, you will be called super senior citizen if you are 80 or more at any time during the previous year. So the basic exemption limit would be 5 lakh. That means the first slab is not at all applicable for you. First slab is not at all applicable for you. That is up to 5 lakh, it was 5% now. That is not applicable for you. Clear? And sir, when should I reach the age of 60 or 80 years? Any day in the previous year. Even if you are celebrating your 60th or 80th birthday on the 1st April of assessment year, still it will be considered that you have reached the age of 60 or 80 in the previous year itself. That means you have completed the age, okay, in the previous year. Then second category of people. In case of firms, LLP means limited liability partnership, local authority, the tax rate is 30%, that is flat rate, 30% of total income straight away. Okay, for the above two category of people, whatever we have seen till now, there is something called as alternate minimum tax which is applicable, which we will be seeing in chapter 13. So as of now, don't break your head with respect to alternate minimum tax. Okay, then coming to companies are categorized into two types: domestic company, foreign company. For foreign company, always tax rate are 40%. Always tax rate, you can see here it is 40%. When it comes to domestic company, we have to see a few things. If the domestic company has been given different options, okay, so where it has opted for section 115 BA, the tax rate will be 25%. Where if the company has opted for section 115 BAA, the tax rate will be 22%. If you are opting for this, then you have to forego certain exemptions and deductions, which we will be seeing in the tax incidence chapter of companies. Okay, next, what are these sections or what are these schemes? Where it has opted for section 115 BAB, 15%. This you can opt only if you are a manufacturing company set up on or after 1st October 2019. Then where the turnover of the company in the previous year 18-19 does not exceeds 400 crore. That is, it is less than or equal to 400 crore in the previous year 18-19. You have to see that previous turnover of the previous year 18-19, but the tax rate will be applicable for which year? 2021. Okay, 18-19 is just for reference sake, that's all. So the tax rate will be 25%. In all other case, the tax rate for domestic company is 30%. If the question is silent with respect to domestic company, whether they have opted for new scheme or whatever they are not given, then always apply 30%, guys. Then for company, there is some special concept called minimum alternate tax, which we call it as MAT, which is applicable for them, which we will be studying in chapter 14. Next, the next category of person is cooperative society. For them, again, slab rate is applicable up to 10,000. There is nothing called basic exemption limit for them. If you are having income up to 10,000, 10%, 10,000 to 20,000, 20%, more than 20,000, 30%. It is also called slab rates. Clear? Then whatever we saw till now is called normal rates. Agree? Then there are some special income which are taxed at some special rates. Which are those? I have drawn a chart. Please pay attention. If you have any long-term capital gains, we have to see from what I have got that long-term capital gain. Okay. If it is from equity shares or unit of equity oriented fund or business trust, it is covered under section 112A, where I have to pay 10% tax in excess of 1 lakh. That means if you have any long-term capital gain up to 1 lakh, don't pay tax. Okay, on EFT, I can call this as EFT. Yesterday we have discussed. That is equity shares, fund and units of business trust. It's like that. Okay, short form. So if you assume you have a say long-term capital gain from the sale of equity share only 80,000, you need not pay any tax. You have 1,30,000, then pay tax only on 30,000. The difference. Okay. If you have any other long-term capital gain on sale of like land, building or some other asset, then it is covered under section 112. It is 20% for all without any limit. Even if you have 10,000 rupees long-term capital gain from the sale of land, you have to pay 20% tax on it. Then short-term capital gain, same case. If it is EFT, that is equity shares, fund or units of business trust, in that case, it is covered under section 111A and 15% is applicable on full amount. No 1 lakh benefit is given here. Please be careful. It is only for long term. Agree? Then if it is any other short-term capital gain like land, building like that, then normal rate is applicable. Sir, what is normal rate? Whatever we discussed before this. Normal rate should be applicable, whether it is a flat rate or slab rate. Hope you guys are clear. And in this both situation, you can see I have put a flower bracket. STT should be paid. Condition. That is securities transaction tax should be paid. Clear? Then there is one more section called section 115BB, which talks about casual income. Okay, so casually I am earning something from winnings from lotteries, crossword puzzle, races, card games, gambling, betting and all. It is taxed at 30%, irrespective of whether it is legal or illegal. Chalo. Next, there is a concept called rebate, which is applicable only for resident individual. If your resident individual's income is up to 5 lakh, then you will be eligible for a rebate of maximum 12,500. It is like 12,500 or your tax liability, whichever is lower. And rebate should be calculated before we calculate health and education cess. Okay. And one more special point is rebate is not available against the tax which we will pay under section 112A. Clear? Then there is a concept called surcharge, which is additional tax on gross tax amount. This is not a tax on your income, it is a tax on your income tax amount. Agree? This we will be asking you to pay, that is we have to pay only when our income is crossing certain limits. It is not applicable in all the cases. So in case, first category of person, individual, HUF, EOP, BOI, AJP, in that case, I call them as slab rate assessees. Okay. So if the total income exceeds 50 lakh, but it is up to 1 crore, then rate of surcharge is 10%. You have to apply this 10% on what figure, guys? Tax figure, not on income figure. Okay. If your total income is more than 1 crore, but up to 2 crore, then surcharge rate is 15%. If your total income is more than 2 crore, but up to 5 crore, it will be 25%. And if it is more than 5 crore, 37%. Highest is 37%. And these are not slab rates. Be careful. For example, if your income is assume 6 crore, calculate tax on that first. Assume you got tax figure 50 lakh. On 50 lakh, apply 37% directly. Apply 37% directly. Don't apply in the form of slab. That is only for normal tax rates. Agree? Then coming to other categories of assessee. If it is a firm, cooperative society or local authority, if your income is more than 1 crore, it is always 12%. It is always 12%, irrespective of how much it is. If it crosses 1 crore, 12%. Then for foreign company and domestic company, we have to see two things. If your income is more than 1 crore, for foreign company it is 2%, for domestic company it is 7%. If in the same case, if your income is crossing 10 crore, if it is crossing 10 crore, then for foreign company it is 5%, whereas for domestic company it is 12%. Clear? Next, note the rate of surcharge in case of a company opting for taxability under new schemes. The rate will always be 10%, irrespective of your income. Even for cooperative society, resident cooperative society who is opting for a new scheme, even for them 10% is fixed, guys. 10% is fixed. Clear? Next, health and education says in all cases, whenever your tax liability is there, you have to pay health and education says 4%. Clear? Next, we have some special new scheme for HUF and individual, only for HUF and individual, which is given under section 115 BAC. Under this scheme, the tax rates are lower, whereas you have to forego certain exemptions and deductions which you are eligible to claim under old scheme. Okay, they are given the list of exemptions and deductions which you have to forego. Okay, all those things we will see when we go to a particular head of income which we have to forego. But here we have to try to understand what are the tax rates applicable if I am opting for a new scheme. Clear? So what are those new scheme? Any for whom it is applicable? Any individual, whether you are a resident or non-resident, and every HUF. And here individual, should I see the age? There is no concept of senior citizen, super senior citizen here. For everyone, same rates. So what are those rates of? If your total income is up to 2,50,000, your total income is up to 2,50,000. See guys, when we are calculating these rates and all, total income should not include your special income, which is taxed at a special rate. We have to segregate it. Okay. Next, up to 2,50,000, it is nil. From 2,50,000 to 5 lakh, it is 5%. Same as my old scheme. From now, new scheme enter into picture. That is from here. So 5 lakh to 7 lakh 50, 10%. From 7 lakh 50 to 10 lakh, it is 15%. Then from 10 lakh to 12 lakh 50, it is 20%. Then from 12 lakh 50 to 15 lakh, it is 25%. Above 15 lakh, it is 30%. Above 15 lakh, 30%. So one shortcut to remember this, simple. Every 2,50,000 increase in the total income will increase your tax rate by 5%. I repeat, every 2,50,000 increase in your total income amount, your tax rate will increase by 5%. Clear? And surcharge rates are same as your old scheme. There is no change. Under new scheme is also same. Whereas for company and cooperative societies, if they are opting for new scheme, the surcharge is fixed 10%. Irrespective of your income, it is fixed. Whereas for individuals HUF, if you are opting for a new scheme, surcharge is same as your old scheme. Clear? So we have some notes also, that is the option to pay tax at lower rates shall be opted by individuals or HUF only if they are ready to forego certain exemptions and deductions which they have listed out in section 115 BAC. Okay. Marginal relief is also applicable in this case provided surcharge is there. Agree? However, we did marginal relief. Next, health and education cess will always be 4%. Then alternate minimum tax provisions are not applicable for the assessee who opt for new scheme. Agree? Then, when should I opt for this scheme, sir? If I am having business income or professional income, I should opt for this scheme on or before the due date of filing the return of income, which is given under section 139(1). Next, sir, if I am an assessee who doesn't have any business income or professional income, then you can opt this new scheme when you are filing your return of income. Yeah. Next, comparison. A quick comparison between the old scheme and new scheme. See, under the old scheme, the basic essential limit is 2,50,000 or 3 lakh or 5 lakh depending upon the age of the individual. Only for individual that benefit is given, that too for resident individual. Please be careful. Whereas under the new scheme, it is always 2,50,000 irrespective of your age. Clear? Then special rates are applicable both under new scheme as well as old scheme. Special rates are same for old scheme as well as new scheme. Clear? Then rebate is also same under old scheme as well as new scheme. There is no change. Deductions, there is a change. Under old scheme, you can claim all the deductions whichever is applicable for you. Whereas under new scheme, there are some restrictions. You cannot claim so and so deductions they have given. So under chapter 6A deductions, you can claim only 2 deductions if you are opting for new scheme. Which are those? 80 CCD2 and 80 JJAA. You can claim only these 2. And surcharge are same actually. Surcharge are same. Then health and education cess are same. So no confusion in that. Then deductions and exemptions is always available under old scheme. Whereas under new schemes, many deductions and exemptions are taken away. Which are those? List has been given, which we will see chapter wise. Next, set off of carry forward losses and depreciation from past previous year. It is always available under old scheme. Under new scheme, it is not available provided it is related to the deductions or exemptions which is not allowed under section 115 BAC. I repeat, any loss or additional depreciation I can call, if it is related to the deductions or exemptions which are not allowed under the new scheme, then you cannot carry forward that loss to the next years if you have opted new schemes. Next, set off of current year loss. Normally, if I have a current year loss, I can set it off against my other incomes also under old scheme. But under new scheme, you can set off other losses but not house property. That means, assume you have a loss from house property head, you cannot set it off against other head like business income, salary income, you cannot set off if you are opting for new scheme. Next, intimation. When should I intimate to the income tax department? Old scheme, if you are following, no need to intimate. If you are following new scheme, you have to intimate. When should we intimate? We have already discussed that. Provisions of AMT, under old scheme, it is always applicable, whereas if it is a new scheme, it is not at all applicable. Clear? Then, rounding off your total income. To section 288A will tell you should round off your total income to the nearest 10 rupees. The final figure, total income figure. Agree? Then 288B will tell you have to round off your final tax liability or refund due from the government for the nearest 10 rupees. Both to the nearest 10 rupees. Easy to remember the sections A, B, because only when you know total income, you will know what will be your tax liability. Only when you know A, you will be able to learn B. It's like that. Okay. A, B. It is in order. Fine. Then format for computing tax liability, we have to stick on to this format. We cannot interchange, guys. So whenever I have total income, see whether the total income includes some special income, which is taxable at special rates. Okay, what are those special income which are covered under section 111A or 112A or 115 BB? These are special incomes. So if your total income includes that, then segregate your total income into 2 parts, that is normal income, special income. For special income, apply straight away special rates, whereas for balance income, apply whatever rates are applicable for you. Clear? So tax on special income is the first step. For that, we have to add tax on balance income. Here balance income is nothing but normal income which are taxable at normal rates. For you, depending upon you who you are, slab rate or flat rate will be applicable. So you will add both. You will be getting gross tax liability. Fine. Then see how much is your total income, whether you are a resident. If you are a resident and if your total income is up to 5 lakh, you will be eligible for a rebate. Reduce that accordingly. Then after that, you will get tax liability after rebate. Then you also check whether surcharge is applicable. See, normally, actually, when rebate is there, surcharge will definitely not come. So rebate and surcharge will not come in the same case. So surcharge, when it is applicable, when your total income is crossing so and so limits, then you check that. If it is there, you have to calculate on gross tax liability. So you have to apply surcharge rate on which figure, guys? This figure. Okay, gross tax liability. Fine. Then you will get tax liability after surcharge. Fine. On this, always calculate, always for everyone, health and education says 4%. No condition, nothing for this. Fine, sir. So I got tax liability. Now I am supposed to pay this much to the government in the form of tax. But if I am not paid advance tax on time, or else if I have not filed my returns on time, they will charge some interest under section 234 ABC. So I have to add that. If I have delayed something, then I will get net tax liability. From this, if I have already paid any tax to the government in the form of TDS, advance tax, self-assessment tax, or else if I am getting double taxation relief for some income which is already taxed in some other country, in that case you can reduce all this. The final amount, if it is positive, you have to pay it to the government. If it is negative, you will get a refund of that. Clear? Then these are normal concepts, whatever we discussed now. There is some partial integration of agriculture income with non-agriculture income. That is, when an assessee has both agricultural income as well as non-agriculture income, there is a concept called as partial integration. That is, the way you compute your tax is bit different. The rates, everything will be same, but the way we calculate will be different. Okay. So before that, we will see for whom it is applicable. This concept applies only, whatever we are discussing now, to only individual HUF, AOP, BOI, that is slab rate assessees other than AJP, who simultaneously have net agriculture income more than 5,000. Okay. Then non-agriculture income more than your basic exemption limit. Sir, basic exemption limit might be 2,50,000, 3 lakh or 5 lakh under old scheme depending upon what is your age. Okay. If you are satisfied this condition only, this table is applicable for you. Okay. So what tables tells we will see. First, take your agriculture income. Okay. For that you had non-agriculture income. So you will get total of A plus B. Calculate tax on this figure. That is on total. Fine. You will get something. Sir, what rates I should apply? Whatever rate we have discussed till now. Fine. Then we are done with step 1. So till here step 1. Fine. Next, A plus basic exemption limit. A means agriculture income here. Agree na? A, I have just given the alphabet so that don't get confused. A means agriculture income plus basic exemption limit. Basic exemption limit, how much ever is applicable for you. Take that figure. Calculate tax on that figure. So I have to calculate tax on which figure? Basic exemption limit plus agriculture income. Okay, fine. So here step 2 ends. So now what is the tax I should pay to the government? D minus F. That is tax on your total minus tax on your agriculture income plus basic exemption limit. Agree? So that is D minus F, I can tell. Then if your non-agriculture income is more than 5 lakh, up to 5 lakh, claim rebate. Then if your non-agriculture income, see, if it is crossing the limit of 50 lakh, 1 crore and all, you have to pay surcharge also as applicable. If it is applicable only. If it is not applicable, skip that step. That's all. Then health and education says at 4% always the final tax you will pay to the government is this figure. Agree guys? And in the format of tax calculation and all, I have given the what maximum things can come. All things might not come in every case. So please be careful. And then the concept of marginal relief. Sir, what is marginal relief? See, this is the concept to give some relief for the assessee who is paying surcharge just because their income is crossed some limits, that is 50 lakh, 1 crore, 2 crore, just by a small amount, just by a little amount. That is like example, you have to pay surcharge if your total income is crossing 50 lakh. Assume your income is 50 lakh 20,000. So you are paying surcharge at 10% on your total tax amount. So in that case, okay, we thought we will give some relief for you. We have to apply this marginal relief concept only when surcharge is applicable plus your income is little bit more than the threshold limits for surcharge. Clear? Next, it is computed as follows. See the steps. Total income you take, on that tax you calculate, surcharge as applicable. Don't add health and education says here. Please be careful. Take total. So this I will call it as step 1. Okay. Next, step 2. Tax on 50 lakhs or 1 crore or 2 crore or 5 crore or 10 crore. All things will not come in the same case. You see which limit you are crossing. Whether your total income is more than 50 lakh or 1 crore or 2 crore. Assume your income is more than 50 lakh. So assume 50 lakh 20,000. So here how much you will take? Okay, tax on 50 lakh. Next step, total income minus 50 lakh. So it will be total income is 50 lakh 20,000 minus 50 lakh. It will be 20,000. Agree guys? So any one will come, but here why I have given all the figure is, okay, if you are crossing these limits, you are supposed to take that. Agree? So calculate tax on whatever limit you are crossing depending upon that. Then total income minus whatever you are taken above, that is what you have calculated tax in this step. Agree? You will get total. So this is called step 2. This is called step 2. The last one will be step 3. Okay? You have to go step by step. So next, lower of A or B. So I have to take this or this, whichever is lower, okay sir. Then for this always add health and education cess at 4%, then you will get tax liability, that is you finally marginal relief is nothing but A minus B. Only when A is more than B you will get marginal relief guys. If A is less than B, no question of marginal relief. Agree? No question of marginal relief. That's all. Chalo.